Hi everyone, Mike Flores here on behalf of Trade Prosper. Let's look at the trades for the week. We're going to start with the economic calendar this week. Volatility is back to certain markets like foreign exchange, precious metals, and some of the equities we're seeing lots of movement. We'll take a look at that in a moment. This week the big Scotland referendum is due, and that'll be a vote on whether they stick with the United Kingdom or not. So people will be paying attention to the sterling dollar to see what happens there. Like I said before, there's lots of economic releases going on this week. I mean, we have major releases every day this week, starting tomorrow with the monetary policy minutes out of Australia. Then we have German economic sentiment later on Tuesday, PPI out of the US. We have the claiming count change out of UK on Wednesday, core CPI out of the US on Wednesday, Canadian numbers out on Friday, and then the G20 meetings start at the end of the week. And basically they talk about various global economic issues, and you can be sure that the Russian-Ukraine crisis will be on the agenda there. Now let's go over to the charts. Let's start looking at the charts and looking at some specific stuff. Okay, we're going to start with looking at the indices. And first I'm going to start with YM, which is the mini Dow Jones futures contract. Now looking here, we see we had some consolidation happen over the last week and a half, and now we've broken a little bit lower, but yet nothing of concern. I spoke on last week's post that major analysts are looking for a correction in the Dow and something in terms of 10% by the month of October. Now we really aren't too concerned until we get a break of this low down here, and which is the 200-day moving average, and this major swing low here. So for now, as long as we stay above the 50-day and the 200-day moving average, I'm pretty comfortable staying long the Dow. Same goes for the Nasdaq and for the S&P 500. Let's quickly look at the Nasdaq futures, the mini futures there. Now we can see that they're in a tighter consolidation period. It's a stronger market. It hasn't broken down like the Dow and the S&P have. So for the moment, again here, if you're long, stay long. Don't have any real fears at the moment in the market. All right, now let's take a look at the energy markets. I have up here a chart of Brent crude oil. You can see that this market has taken a nice move lower. We had some periods of consolidation. It broke down. Period of consolidation, broke down. Some consolidation, and it's broken down. At the moment, I'd rather be shorter Brent than being short crude. You can see the 200-day moving average and 50-day moving average here. The 50-day moving average has crossed below the 200-day, which is a negative signal. And we can see that the trend is strong because the ADX, which is a trend indicator, is trending above 20, and it's blue and positive. Now notice it's above 40, so we want to take notice because the trend is getting stretched. However, it's still good at the current time. Let's quickly look at crude so I can show you the comparison. Looking at crude, you can see crude's down move hasn't been as strong as Brent's, and it's not that far below the 200-day moving average. And here, the market, the 50-day, has not crossed over the 200-day just yet. So if you're short, rather be short Brent than crude. But this is what I really want to take a look at in the energy sector at the moment. I spoke in the beginning about gasoline going down to $3. So what I'm looking here is gasoline has broken below the 200-day, the 50-day. The 50-day has crossed below the 200-day. And now this black line is the 55-day channel low. So what I'm looking to do is sell on a break of this low with my stop at the high of the breakout day. Okay? So I would sell on a break of this low with my stop at the high of the breakout day. That's what I'm looking for in the gasoline market. Now the ADX is blue and climbing, which tells me that the trend is continuing lower. So we want to look for that setup. I'll place that order tonight. And what I'm really looking for to see is it break this low and then test this 240 area. These lows all the way back here in November of last year. Now a move from there to there is about a little over $3,000. I think $3,200, $3,300 per contract. So that's a pretty good move. And we're just going to keep our eyes on that and place that order today. Now let's move on to gold. Gold's broken lower already. We've seen that we've had 5 consecutive lower closes in gold. And what I'm really looking at now here is to see the psychological level, the 1200 level. It's not an actual real support level. There's not real price support there. There's some congestion back here, back in December and Jan, but it's really a psychological level at this point. We've broken below the 200-day moving average, and now the 50-day moving average is turning down and looks like it's going to cross below it, which will be giving the move more confirmation. So at the moment, I probably wouldn't be looking to sell today, but on any move back up into the 1260 area, I'd probably look to get short there and leave a stop above the 200-day moving average. Okay, in the softs market, I'm looking at Coco. Now, Coco has had a big down move earlier in the month, and we see we're now flirting with the 200-day moving average. Now, this is going to be significant support because we haven't been below this level since July of 2013. So it could be support this first time down. So I'll be watching this closely. I don't have the 20-day moving average up here, but that's something I would watch as well. I just crossed below the 50-day moving average, so it could give some weight to the downside. We saw the 55-day low was broken last week, but I really want to see some confirmation of it get below the 200-day moving average before you add to any short positions at this point. For those of you that have been trading the grain markets this year, we saw a big move in the beginning of the year upwards, a very decent size move. Then we had some consolidation, and now we've had a really big breakdown lower in almost all of the grains, but here I'm looking at corn specifically. So with that big move lower this year, we see that corn broke below the 200-day moving average. Then we had the crossover from the 50 and the 200-day, giving the move more confirmation. And currently, the market's about 23% below its 200-day moving average. Now, that's pretty stretched. All of the grain markets are pretty stretched from their 200-day moving average. Normally, when you get around the 15% range below the moving average, you tend to see a move back. Now, that's not a rule, but it's just something that happens quite often. Now, the market did break lower. It consolidated in the 15-16% range below the 200-day moving average, but it's broken lower now, and we're making new lows every day. So what I'm looking at here is we have an inside day in corn. We have an inside day. The high and low of Friday's move was inside Thursday's high and low. So the way I look to play that is sell on a break of the low with my stop at the high and look for a one-day move lower. It's a one-day trade. Just looking to play on the momentum of this big move down. Notice the ADX is climbing, so the trend of lower is still intact. So that's what I'll play there for a one-day move. Now, the dollar has been getting pretty strong over the past few weeks. We've seen that throughout the currency markets. And what I'm looking at here is in the weekly chart. Notice this is the weekly chart of Kiwi. We're flirting with the 200-week moving average. And I'm looking to see what happens, because if we break below this week and close below this, that's a very bearish note. And then below that level, 80.50 is the first weekly level that I'm looking at. And then below that, we don't have anything until down here. So we'll look to see if the dollar continues its strength, and we see the ADX turn higher a little on Friday, which means the trend is starting to continue lower. So I'll keep my eyes on this. Now remember, this is a weekly chart. And I want to bring up to your attention a couple other dollar weekly charts. Let's look at dollar CAD. Dollar CAD is in the same boat. The dollar's gotten stronger. And now looking here, this 112.79 level is what we're really watching to see if price action works up here. So we're looking to see if we have a break and close above this level for the dollar move to continue. Now I will tell you, I do prefer the Kiwi over the CAD, as the Kiwi has been weaker than the CAD overall. For those of you that trade dollar against emerging market currencies like Mexico, Singapore, Turkey, or Rand, I want you to take a look at the dollar Rand chart. Okay, the dollar Rand chart, out of all the emerging market currencies, Rand is the weakest at the moment. Now again, this is a weekly chart. This is a weekly chart. And this 1139 level is big in Rand. Now, you might say, well, that's 40 big figures away almost, or 39 big figures away. Yes, it's far away in terms of big figures, but for dollar Rand, that's not an impossible move at all. So we're really going to watch this to see what happens here in dollar Rand. So this is just basically a dollar play across different markets that I wanted you to have a look at. And lastly, we're going to take a look at the Australian dollar. Now this one is going to be looked at on a daily basis. So let's change this to a daily chart. And again, we see the Aussie has gotten weaker against the dollar. And it's broken through some serious levels. We broke through the 55-day low here. Then we broke through the 200-day moving average, and we closed below both of them. Notice how the ADX is getting stronger and now creeping above 20, which means the market trend is weaker and it's getting stronger with the ADX getting strong. Okay, now the key levels I'm looking at here are 88.90. Down here in this area, and below that we're looking all the way down here at 86.75. Now I'm going to make the chart a little bit smaller so you can see that those are really significant levels. 86.75 is the important level that I'll really be looking at. That's a major, major low. Okay, those are the trades that I'm looking at for the week in currencies and commodities. My colleague Billy will come up later in the week with some option ideas on some equity markets that we're looking at that we have some really good plans for. So on behalf of Trade Prosper, this is Mike Flores. As always, I would love for you to leave your comments, feedback, questions, concerns, thoughts in the comment section below. And I look forward to seeing you guys soon. Have a good one. Bye.